morning, good afternoon, and good evening, yWhales. So I know where most of you are. It's in Palm Beach. And I'm just so thrilled because for the first time in really since the inception of what yWhales was supposed to be and is now kind of evolved into, we're at our first conference. And I've got Jessica with me, and it's the first time we've met in person. But I've had this feeling that keeps happening when I meet people, and there's 100 of us from around the world, and you see the face, and you go, I recognize the face, but then there's a whole bunch more because we're settling out on Zoom. Has it just been like a really surreal feeling for you as well to meet all these people that we've known for a year, but never actually physically been in a room with?
It's almost like going from 2D to 3D, or Web 2 to Web 3.
It really, I mean, again, like the logistics are so hard. And, you know, when we think about, I mean, from all around the world, I mean, people spent 30 hours on a plane to get here, and that's just not feasible. And so really it's the first time of me trying to really understand like what the metaverse can and should be. And the metaverse, you know, like right now everyone's talking about games and this, and there's little squares of green land that cost, you know, hundreds of thousands or millions of dollars, of which there's nothing to do there. And I'm suddenly realizing, you know, the value of being able to connect with people, you know, via Discord or chat or, you know, WhatsApp or Zoom really does have a hard limit, because it's like you turn it on and you turn it off, and you miss those kind of interactions of the people that are watching, the people that are nearby that are hearing us talk. And so I really, as we're at this conference right now and I'm looking at everything that they're pushing, I'm going, we are so early. It is so early in what Web3 can and should be, which is the connection of people, you know, irregardless of where they are on the planet.
I couldn't agree with you more. It is early. And it's an interesting time too to be at a very big conference that's been planned for a very long time and really look forward to. And then there have been some bumps recently.
Oh.
Bumps in the road, a couple fairly significant events, but it's interesting to juxtapose that with all of the folks who still have come here together.
Yeah, you know, and we'll go ahead and dive right into the bumps on the road, and that's the talk of the conference is, you know, literally hours, you know, before Permissionless started. I mean, Terra and UST had their meltdown, you know, and we're really now seeing the end of, I think, algo stablecoins, because I don't know, you know, we saw UST and Luna go down. We're seeing Phantom have issues now, and so, you know, while everyone's been blaming Tether is going to be the end of Web3, you know, Tether still is held strong. I think they kind of came off their peg by maybe about a penny during a recent attack I saw last night. But, you know, that's a very different process than these algos.
I agree with you. It's certainly been the talk of the conference.
Yeah.
And will it be the end of stablecoin?
Algo stablecoins.
Algo stablecoins. I agree.
Okay.
I do agree.
So for the people that you know maybe don't understand what an algorithm stablecoin is, do you want to take an attempt at this?
There are just so many pieces and smart contracts and technical ways that actually keep it functioning and
Yeah.
connected to it. It's hard, and to be honest with you, I have not done or looked into the root cause analyses yet to understand, hey, and I actually plan to do that. I mean, I would like to spend a little bit of time just for educational purposes of looking at the RCA, the root cause analysis.
Yep.
What tripped it into the spiral, if you will, right? Because there were a lot of pieces that when from a computer science perspective, if you looked through how does this work, it made sense.
Yep.
But you mentioned you were scared of it, and we never were able to fully commit to it either. I felt that
there was numerous people in our community that were like, algo stablecoins of the future, and I said, please explain it to me. And you know, I can say there was like hour-long sessions in depth about how these things worked, and I'm a very simplistic person. I'm not a computer science major like some of you, and so I literally looked at this and go, I understand the concept, I understand the rationale, but what the parts that I don't understand, let's go ahead and I can pull back, because I do understand the blockchain. I do understand how smart contracts work, and quite simply, like, there's the possibilities for failures on these smart contracts is still very real. I mean, even with as early as we are in Web3 and blockchain technology, like, things go down. And so, you know, like, let's take Web 2. I mean, Amazon S3 goes down all the time. Azure goes down all the time. There's issues with those are solid, you know, multi-billion-dollar companies. And so when you take something as complicated as these algo smart contracts, I just looked at it and said, if it's a one-to-one representation of a dollar, but I can go over to Circle and they're doing it a very simplistic way where I know there's this. What's the benefit here? And I understand a lot of people want for these you know, APYs, like you can get a solid 20+% and everything else. Mm-hmm. And it just, to me, it was like I just said no. And listen, there's been I've been wrecked on plenty of projects, so I can't claim I'm a genius. I just simply, this was one that I couldn't say that I could understand the value of making something you have this here on one side, you have this on the other side. It's essentially a bridge. Mm-hmm. That makes sense to me. Having 17 smart contracts having to work in harmony across all these different chains. Well, I mean, we saw the end result.
We did see the end result. A different way in which we evaluated it, and we didn't choose to not do it for the same reason. When we were evaluating it, my husband and I looking at, hey, do we want to? How much of our liquid do we want to put in this? I was looking at it from the perspective of, hey, should we consider taking some of what we have in fairly low risk, very stable, sits there, doesn't earn a lot of interest, bond type, that percentage of your portfolio, should we consider putting that in these 20% APY stablecoin pools? And where I couldn't get comfortable was the risk versus reward. It seemed like for something that was supposed to be stable, a really good reward, the 20%.
Yeah.
I couldn't get comfortable that it was really low risk enough which is interesting, right? I couldn't get comfortable that it was low risk enough to take that part of our savings and then so I kept looking at it and saying, I actually think the risk is higher, and then if the risk is higher and it's only 20% APY and there are other blockchain related investments where I felt that maybe it was a similar risk but a much higher potential return, and that was really our evaluation.
Yeah, and let's be clear, I think that you and I come across or come about Web3 in a very different perspective, a little bit from each other, but also when you take a step back, we're very different from the market. Like, I look at these projects and I evaluate them not on where's the coin going to go, because we do this podcast all the time, and I've never once asked any project founder, like, where's your coin going to go? Like, that's irrelevant. Right. What's the technology? Is it sound? What's the future use case? And what's your team? And that's really the end of it. And to be clear, I was super excited because Do Kwon was supposed to come on the podcast in a couple weeks after Permissionless, and he's canceled his appearances here. He did an in-person speaking event for YPO. Literally, I think it was probably his last public appearance before this crash. And the repercussions of what's now falling out in the Web3 industry is really heartbreaking. And could it have been avoided? I don't know. I mean, clearly there was a little bit of a lot of FOMO. People were moving themselves into chains like Terra and Phantom, which are, again, these are new level ones. It's new technology. There's nothing stable here. But really, this last crash caused a number of cascading effects around the industry that's going to take a minute to recover. Number one, I think that proof of stake is got a little bit more work to do. We saw that regardless of what everyone's feeling was, proof of work stood up, did just fine during the crash. Everything worked, nothing happened, and all the issues and all the problems really were on the proof of stake networks.
Agreed. And I was thinking about our last podcast where we were chatting with some big heavies, right? And in the blockchain space, and I was thinking about our API discussion, and about that discussion around, hey, what do you think about those? And everyone was like, oh, it's a problem, right? And so it is a problem. And by the way, API is just where things connect. Yeah. And so when you were talking about these stable coins and you were talking about there being all these many different smart contracts, those are all just connection points. Yeah. Not so different from the way that an API might work. And there is, just from a architecture perspective, from a tech fundamentals perspective, it is not mature. And these connections are often the weak links. And so I guess I would encourage, and anybody that's looking into it to ask those questions. Hey, how many links are there here? How many different, and you don't even have to like understand APIs or understand smart contracts particularly, but just how many different pieces have to be connected for this to work, this project to work, how many different smart contracts might be involved, and just think of that as one more risk to evaluate.
Well, and I think there's a little bit that we can also throw into this, and I always hate to use this word, but I think there was a little bit of an ego issue that happened here, because when we talk about blockchain, everyone's like, oh, transparency and open and everything else, but the reality is that I don't care what your company is, I don't care what your thesis is, like there has to be corporate secrets. You have to have a centralized team that at the end of the day is still monitoring this if you're going to be evolving the way that Terra and Luna and everything else is evolving. Bitcoin can be 100% open source and absolutely nothing to it because it's locked down. It's proof of work. Nothing's going to change. You can evolve it a little bit and do a couple forks, but for the most part, like it is what it is. With what Luna was doing, and there was public tweets that were announcing roadmaps that, what as we know now, kind of revealed a few weak points in their roadmap, meaning like we have to do A, B, C, and D to get to X, Y, and Z, and all that it took was for people to know, okay, here's C, if D and E are this, then we can hit now. And we actually saw this game plan is now rolling out, and people have now understand how to attack these stable coins, because they can push and pull liquidity in and out faster than the blockchain can react. And then all it takes is a slight depeg, and the market does the rest. Everyone goes to rush to pull out. You can't burn fast enough. The blockchain isn't quick enough. It's just, it didn't work.
I think we call that a death spiral. Sadly, but I think that might be the technical term.
So let's pivot. And I've heard a few really sad stories. There was there's multiple startups. There's multiple people that really believed, and I it's one of those things. And they had a lot, or most, if not all, of their net worth in UST, believing that was a stable representation of this. And the one thing I never give trading advice. You'll never hear me say buy this or that. The only thing I say consistently is never use margin. There's no reason in this type of environment to ever get ahead of yourselves in this. And that's the people that are really in bad shapes. And there's startups that we're hearing from, newly funded, brand new teams, amazing ideas that would have brought value to this ecosystem. They're done. They're gone. Their treasury wiped out, and they owe money.
I agree with you on this too. We have as you know, someone in our community who is a former options trader and just one of the most brilliant people I've ever met. And it reminds me of when I was learning how to play poker, and I learned enough to realize that I can't do the math in my head. I'm not smart enough to actually be like amazing at this game. I can't crunch these numbers in my head fast enough. And I feel a little bit that way about options, about margin. I'm not sure I'm smart enough to take those kind of bets. I think that I'm better off, at least for me personally, and we, again, no investment advice here whatsoever.
Never. Please, if anyone's listening to me on investment advice.
No investment advice. But for me personally, I have to think the only way I feel like where I have any edge or I can be successful is to think what is a good long-term bet?
Yeah.
What do I think still has staying power in X period of time? Because I am not smart enough to figure out what things are going to do in a near-term horizon.
Yeah, I think, let's be clear, I am, for anyone that lost money in this, or anyone that's had risk, that's been exposed and is feeling uncomfortable, this is a terrible thing. But for the overall Web3 ecosystem and the asset class, this is the shedding of a technology that just I don't think will come back, and I didn't trust them before, and I don't think anyone's going to trust them further, so we can just move on from this. And a stable coin should be a very simplistic, boring thing. I think we're most likely to see the government step up with the CDBC, which people can say is good or bad or whatever the case is, but the reality is that I believe having a stable currency is what got us the first this massive bull market. And right now we're seeing a little bit of a bear for a variety of reasons. I'm not going to blame this because we're already in the bear market when this hit. But I think that, having a true stable coin that people can trust to jump in and out of without having to go back to fiat, because that's what happened, is suddenly everyone goes, I don't know what to trust. And that was really the first hours of like seeing that depeg of why is it depegged? What happened? Is Tether next? Is USDC next? Where's DAI going? Oh my God, the flood that was flowing around. And so the exchanges were melting down as people just extracted. I think in the first 24 hours of that depeg, there was, $300 billion removed from the total market cap of cryptocurrencies. I mean, that's a huge amount of volume.
That's a lot of money.
That's a lot of money. And so, now I think it'll be interesting to see, what gets rebuilt in its place. Like every time we hear about wildfires need to happen for the forest to regrow. And so I think what we're going to have is a little bit more of a disciplined group looking at my stablecoin, probably isn't going to earn 20% by magically appearing money, but most likely, it's just a way to say, I want to be risk off. And I think that's what really it should be.
Yes, and I think what else is going to happen here is we are going to see and who is agile and who is not. Yeah. Right? As we see any new emerging technology and waves of technology happen, it's adapt or die. Yeah. It's not a constant evolution, a constant innovation needed. Yeah. There are these big events that happen, and how do you pivot? Yeah. Who can adapt and who is in a situation where they can't turn that ship fast enough from where they are and what they've built.
And I think we're seeing a little bit of the, I believe very much in centralized leadership. I mean, that's we're YPO, we're CEOs, that's what we do. So I believe you have to have a voice driving the ship. Otherwise, there's a lot of noise that may have valid reasonings, but there's not a lot of, logic behind being able to see the full picture. But I think we're seeing some of these decentralized teams being, in crises, unable to make decisions, asking for votes and getting just chaos back, and then they're diving around. And so I think that, again, I fully believe in DAOs, our roadmap and what we're doing, and how much I believe in the technology and Web3. So that's not shaken. Blockchain did stand up. The amount of success that we've seen in and around the industry is massive. Like, proof of work stood up just fine. No issues, no problems, not a single issue or error there. Most of the other chains absolutely stayed strong. I think Solana had a 7-hour reboot again, but they're still early. They're 18 months in there, and everyone likes to say, oh my gosh, they're almost over and done. Not a single transaction lost, nothing else. And again, it's a very centralized team working this. So I think what we're seeing is a little bit of a difference of the rush to decentralization is maybe having a little bit of an effect on some of these projects where they're getting stuck and unable to kind of make what's the best decision versus what's the popular decision.
And is it really all decentralized, right? I mean, that's a controversial thing to say.
Oh, well, we're going to go there?
But it's not. There have been so many articles written on this. I don't want to try to, repeat or quote or et cetera. But when it comes down to it, there are a lot fewer players than I think many who really believe in decentralization would say. Yeah. There are fewer people who actually control the largest amount of assets, who then are running nodes, who then have the approval. I mean, there is, when you get into the actual numbers of it versus the governance of it, and then you tie if by governance you mean running nodes, and it is perhaps a bit less decentralized than one might be led to believe from the underlying technology.
And I think that's the problem, is if you're going to have these centralized points of, whatever it is, like, just be public about it, be proud of it. I mean, these should be teams that should be known. You should be proud of who you're investing in, who's behind this. And so we may see, again, Do Kwon was a very public figure, but I think we've seen, kind of a lot of the anons really getting attacked in the industry for a variety of reasons. And I don't know, again, I'm never going to tell someone they're wrong for not wanting to be known. I choose to be known because that's what I do. But I see a lot of the benefits for people wanting to stay anonymous in this industry because, I get a lot of, really angry emails about random things that I have no idea about. So I think we're going to see a lot of, again, the wildfires hit. We've had another crash. And so now what's going to take its place? And each time we've seen whatever level of bull run be pushed by some new thing, NFTs, DAOs, you know, and clearly, you know, there may be a rise of a very good stablecoin or something else to come in its place that does have, you know, some level of like, okay, I can finally take my money back out. You know, the $300 billion that rushed out of the market is ready to come back into a different, slightly different environment.
Sure, and it's going to be interesting to see what role regulation plays in that environment. Unfortunately, news like this and systems that were touted to work, and when you're trying to get regulators comfortable with new systems, comfortable with things working, and when they don't work and there are bad headlines and people lose a lot of money, then unfortunately regulators see that as a negative and as something that they need to step in and think about enforcing. And look, our country, we're here in the US today, and we're both US citizens. Our country takes a long time to implement new policy, so I don't think it's going to happen overnight, but I can share the folks that I've been paying attention to and listening to their statements and reading who's working on Web3 technology in the Senate, in the House. What are they saying? It's shifted to a more autocratic thought process.
You know, one of the and regulation we always know is going to come. This is going to push it a little bit, I think, in the firmer direction. And again, I'm not going to argue too heavily against, you know, heavily regulated stablecoins. You know, we're not, stay away from Bitcoin, stay away from a lot of these things. But, you know, if you want to say, like, if you're going to advertise and market that you're a stablecoin, I'm not going to, you know, we'll see what the regulation is. I'm sure I'll disagree with large parts of it because they'll throw in lots of things. But, you know, I think that one-to-one representation of you know, a fiat to a digital currency, you know, should be something a little less, you know, flamboyant and risque than that. You know, I'd also like to point out there was a few kind of real, like, issues that came up that I'm talking to a lot of our members and people around the conference, because when they did believe, okay, I'm going risk off. Like, there's people that flew in, not just yWhales, but people flew in from all around the world to be here. And, you know, I had a number of conversations with people that, you know, they left home. You know, if you're coming from Australia, you're coming from Asia, like, you're not flying straight here. So a lot of them left, you know, and said, okay, I'm going to go, if I'm going to the States, I'm going to I'll get there a week early, I'm going to do this, I'm going to travel and everything else. And the one thing you hear constantly is, like, you know, leave your ledger at home, leave it in a safe place, don't travel with your things. And so there was numerous people I talked to, they're here in the States, they have no access to their wallets.
It all went
down. And so they can see very clearly where they're at. But, you know, they were on a plane at the time when it was depegging and going down, and, you know, the flight back is 30 hours if they need to get back home to do this. And there's, you know, so it's, you know, these things are locked away in safes. And so I think, again, you know, there's so many, we're so early. And I can continue to say how early we are because the thought of, like, I have identified an issue with my portfolio, but I can do absolutely nothing about it because it's in a safe at home where no one knows how to access it or anything to do with it. And so these are the problems that have to be worked out. Like, what's the emergency access? You don't ever want to say there's emergency access into your ledger, but, you know, the fact that you're not carrying one, or for good reason. You know, I didn't bring one here to the conference, but, you know, also if USDC goes down, I'm going to have the same problem. So it's an interesting thought of, like, how does people in this industry going to manage their portfolios from here?
And that is technology that I know you and I are both following some projects that we hope will help make some progress toward resolving some of this. That's technology that is driven by a real need, right? Yeah. A need to fill the void. We are going to, and look, there's so far to go for mainstream adoption of some of this.
99% of people would never touch a ledger. I mean, I love my ledger.
It's really hard to use.
It's you know, it's the 14K modem of Web3. I mean, it's like, it gets the job done, but it's not a great experience, and no one really enjoys it. And, you know, so we were at the conference yesterday, and I saw Ledger, and they're there, and they're touting all their new little flash drives. And I'm just going after, because we just signed up for Fireblocks, and you know, once you kind of see that system and what they have built in there. Now, keep in mind, Fireblocks is $60,000 per year at the lowest level.
Right.
But when you get in there from an institutional perspective, and you see how they manage cryptocurrencies, you're like, okay, this is it. This is the way to do it. And you know, Gnosis wallets, again, not anything on that team. I don't know anyone that's had a good experience with kind of that level. So I think there's an evolution of multi-sig. I think there's an evolution of, you know, that we're going to see that banks will eventually get into this, where, you know, there's a shared private key amongst, you know, you have to have multiple signers, because that would work for most people to say like, hey, if it's under X amount, move it at this much over X amount of hours. If it's over this amount, then we have to have, you know, two signatures at the time. And so I really do believe what Fireblocks is doing is the evolution, but that technology has to come down to free. Like, it can't be, you know, even $6,000 a year. Like, you can go open a bank account.
It's prohibitively expensive.
Yeah, you can go open a bank account anywhere and have access to a very basic level of security that I walk my money in. I can walk back in and get it if I need it, if my debit card doesn't work. And so, you know, I think that Fireblocks and some of these other ones, like, to me, that's the biggest thing. Like, what's the wallet going to be? Until we have a true wallet. And I don't think a wallet's a hardware device. I don't think a wallet is even a single piece of software. I think, you know, what Marshall and Proton's doing is a very interesting perspective to say a level 1 is just a wallet. I don't think that's what Marshall's planning, but that's the way I use his chain, is just quite simply as a wallet.
Well, it's the best user experience wallet that I've used.
Yeah.
And we've got to start somewhere. I mean, we have to think about user experience, again, to get any type of mainstream adoption, because we're heading there. Yeah. And and I, you know, I wonder, it was interesting, here at the conference, Coinbase is the headline sponsor. They had a large opening session with their head of product, and most people that I know who are making their first foray into cryptocurrency do mention Coinbase. They do get started in Coinbase. They even potentially think about Coinbase as a wallet. So it's going to be interesting to see, will a very large incumbent that is very well resourced solve this better, or will we see someone who understands the problem and is closest to trying to solve the problem, not for a bunch of other crypto nerds, but for grandma and, you know, my brother's cousin's uncle.
You know, and it's really, the Coinbase example is a good one, and I don't want to knock anyone at Coinbase, because I know how hard they work, and as full disclosure, I do invest in them in the stock market, so, you know, it's there, but I don't love Coinbase. I don't use it anymore. I've retracted quite a bit from it, just because it's not that I don't believe that they have a very amazing team. I just feel like they're losing touch with actually what crypto is supposed to be. It's not supposed to be a centralized, you know, everything lives in your ecosystem, which is what they do. But, you know, the amount of members that we have that are like, I'm locked out, did nothing. I got locked out for 3 months. I did absolutely nothing. And so I think that's, you know, one of those things that it doesn't take much for someone who's entering a new asset class and saying, here's my first foray, and any bad experience is enough for people to say, yep, I tried it, I'm done. And then they walk away. And so I just, the one theme I think I can say of this conference is we're so early. Anyone that believes that within the next 12 to 18 months, crypto and blockchain is going to be like mainstream, it will. Not in the next, I don't think we're even close.
I don't think we're close either. So the question is, what are the Trojan horse technologies? Right? What is going to get people interested, and what are you know, what is the utility that gets, because it's something that solves enough of an everyday pain point or desire that enough people bother to do it, right? And
I stood around, you know, last night at one of our events, and, you know, a group full of, you know, probably 20 VCs. And we're all talking about, you know, the markets that we're playing and everything we're doing in cryptocurrencies. And I just said to everyone, I said, in your normal lives, are you guys day traders in the stock market? And they said, no.
Right.
And I said, then why do we do this in cryptocurrencies? And they go, we don't know. And I think that that's the difference is right now, and I've said this, you know, so many times, most of what occurs in the cryptocurrency market is the equivalent of people rushing into, you know, Walgreens and looking at all the gift cards and going, this one's shiny, this one's blue, this one's got this, oh, my friend told me that this is a great one to have, and they're buying these things for over the dollar value, and they're trading with their friends. But if you actually ask them, like, what does this gift card do? They go, what do you mean? It's a coin. It goes up. No, that's not what it does. It actually, this is this is fuel for this blockchain, and this is how it works, and you can run nodes on it. And you can do this. Yeah, I don't know how to do any of that, but I own it and I'm invested in it. And so I think that there's really going to be a dynamic shift that's going to happen right now, because there was the explosion of level ones. I mean, explosion of level ones.
Yes.
Like, I mean, I can count, 10 people I know that are like, I'm running this level one, I'm doing this level one, and I've invested in a couple new level ones. And I think you're going to really, this is going to really cool the market on how many level ones we need right now that are forks, maybe in that capacity.
It depends on, I don't know if I agree with you there.
Good, please. I don't believe I'm right, so please argue with me.
I think it depends on, right now, so is it the level, how many level ones and how many projects are going to build on existing chains versus saying, I'm going to be, my own business, my own project, and I'm going to build my own chain that is, based on this underlying framework, but it's going to be my own chain, and the way that I'm going to finance it is by issuing my own token. And I think it's, from the standpoint, it does change startup, entrepreneurship, VC investing, I think fundamentally forever. I think as we see this shift continue to occur, right now it's really still only tech companies. But what happens when someone says, hey, I'm starting whatever product company, and the way that I'm going to finance it is by selling, my token on, and on either this side chain and what's interesting for the investors, I've done some early stage investing. Can't say I've made any money that way.
Guilty as well.
I honestly, my returns, certainly cannot brag about any returns I've made in my early stage. But here's the thing, some of those companies are doing okay, but I'm so long from seeing a return from an exit. My money is locked up for, might as well have just said goodbye to it. And what's interesting about investing in early stage projects is you can decide at any point in time, hey, I'm actually going to pull out of this one. I don't believe in what they're doing any longer.
And I absolutely do believe you're right on that. I mean, so the idea of being able to tokenize ownership is huge and massive. The education of people to understand what's a coin, what's a token, what's a project, what's a thing is the thing that's going to take a little bit of time in this industry. But I do believe that, number one, I believe in chain agnostics. Like, anyone that believes that there's going to be one chain that rules them all, I don't believe it, and I'm happy to have that conversation. And the ETH Maxis will absolutely be sending me tweets about
you can expect
about long white papers. Yeah, I know exactly what words trigger them, and we'll have conversations about that later. But I look at Burst IQ. I don't know, you probably haven't watched the podcast, but Burst IQ is a perfect example of, they have to be on their own level one. Ethereum will never work for what they do. There's nothing else that exists. They needed multiple levels of security built into their blockchain, and because they're dealing with HIPAA requirements and everything else. And so, you could go on a side chain and do all this other stuff, but to be compliant, and that's the problem, is if you actually say, I want to make a product that's compliant with current laws, you don't get to say, I made this thing, it's really cool, here's how it works, SEC, like, sorry, your laws are ancient, it's not going to work for us. You got to kind of start with the archaic thing and just work forward and know that it's going to evolve over time. So I entirely agree that there's going to be a lot of innovation, but what I think I was trying to say is I made a new chain just to make a new chain, and it's the same as the other chain, I just forked it off. We may see a little bit less of that.
We may see a little bit less of that.
Yeah,
we may.
And I hope that again, the ones that are 90% marketing, 10% tech, come down a little bit. And I'm not going to name names there, but there's a lot of chains that have zero utility, and I think that's the word that I hope that's the next bull rush. the next bull rush is based on utility of coins, utility of NFTs, and Permissionless, I think, did a fabulous job of it. You know, the Permies, did you do the Permi?
We did not do the Permi.
Okay, yeah.
I did not do the Permi.
So I support almost every project. So I looked at the Permies. There was 555 of them. There's 5,000 people attending the conference, so about 10% of people. I think it was like 1.1 ETH or whatever it was, but the utility behind it, the artwork was pretty, but the utility behind it was, number one, it was your pass. So it's your conference pass now, plus for all future permissionless conferences. Now, depending on the conference, I'd say that may or may not be good, but this is Bankless. So I feel like Bankless is, you know, at least got a little bit of staying power here. They've done a great job with the conference, but the utility was, it's a party pass, it's a VIP line entrance. Like I walked right into the conference and bypassed all the lines because I was a Permi holder. And so I think that was, you know, was it the right price? Probably not. Although the floor on them is still 3 ETH today, even after the conference is really fully underway and the utility of it's kind of gone. So there's clearly something of people saying, I have a permanent pass for all future permissionless conferences, and I think that's essentially what it is, and not a, hey, here's a profile picture that you can have and it's rare because we say it's rare. And there's nothing else it does with it, and we hope a community finds value in it.
Yes, and I'm going to tell just a little story of a, I won't name the angel investing group, but I joined as a lifetime member of an angel investing group that invests in cannabis.
Okay.
And I've been a lifetime member now for a decade. And for the first few years, that was probably a good financial decision to have paid the one-time membership fee for this lifetime membership. What happened over time is that business model didn't really work for them.
Gotcha.
So I think it's just really hard to evaluate these types of investments. Or, hey, so for instance, did you buy the Permi just for this one use, or did you buy it really thinking you're going to have future use? Because I can tell you what happened with that conference. So it was a conference that was, connected, and a group that connected angel investors interested in investing in cannabis with entrepreneurs who were who wanted to pitch to those investors, and you could be an entrepreneur member or investor member, and I was actually the first female investor member.
Oh my gosh.
Yes, but over time, the business model of selling those lifetime memberships just wasn't successful. Yeah. And so even if you had paid for a lifetime membership, then, oh, but this is a new type of event we're having, and now it costs X amount of money to be involved. And they just had to keep coming up with different ways, to the point where at this point in time, I don't think my lifetime membership has any value whatsoever. Yeah. Unfortunately, even though and maybe because they chose to pivot their business model and not just stick with that lifetime model.
You know, and that's startup phase. You know, you got to get cash in, and you got to give promises. Hey, we're early. We're going to do these things. I think we can even go back and say this isn't a Web3 problem, or even a marijuana industry problem. This is, I think it was TWA and a few of these airlines, said, hey, for back in the, was it late 80s, early 90s, like for $250,000, which is, I don't even know in inflation numbers what that is anymore. You can have a lifetime, all the flights you want for free. And a few people that had the money and understood what they're looking at go, absolutely. And still today, are just flying around the world, and the airlines are losing, millions and millions of dollars on these things. And for airlines that are already losing billions of dollars, like that's a big deal. But I still look at the utility, and I hope that that's the next bull rush, is people saying, now I can use this cryptocurrency, I can use this NFT. And I want to point out, there was the technology to take your Permi and turn it into a badge was flawless. It was absolutely, we'll make sure we link it with the podcast. But I was really impressed. You went onto their site, you linked your wallet. Here's all your NFTs, and it just showed like this one and this one. I had another one I didn't realize had utility behind it, and it said, what do you want, permissionless or the other one? I said, here's permissionless, and it goes, well, here's the one that's valid. Do you want to claim this? And once you claim this, like its utility has been used and it's locked into this. I said, great, done. literally got an email from from Permissionless. Here's your new badge number and everything else. And I was like, that's the way it should work. That was flawless. It took 5 minutes. I delayed doing that for over a month because I'm like, I don't have time to log in and do whatever DeFi thing they're going to make me do. And I go, that worked. So I'm hopeful that we can see the evolution of that technology here coming out of these conferences of going, it doesn't have to be complicated. It doesn't have to involve 20 smart contracts flying around back and forth. I would use that one again. I would encourage people to use that utility again. And so, we'll see what happens.
We will, but I think you're right about the utility, and in particular, we're talking about, in some ways, like a membership and access pass type utility here for NFTs specifically.
Yep.
I know you and I have talked about NFTs being used to potentially replace insurance certificates, to replace, I used it in my business to send an exclusivity token to a partner with whom we were doing business, rather than buying one of those hardware things and saying, this is your token. We sent an NFT. And so there are these utilities that I think are arising, and it's which ones are going to solve a pain point, right? Because people really, they'll do a lot more to avoid pain than we will to seek out pleasure. So
100%, and this has really been a fun conversation to have, because for the first time, number one, the conversation's flowing back and forth so easily. But the thought around, like, let's go back to some very basic things that blockchain can solve. And blockchain can do a few things very, very well, and others it's just not there. Like the computing power of which to process very intensive things quickly is not there, because the blockchain, it stutters, it has issues, and so it's still kind of a Web 2.5 approach for a lot of these things. But the idea around that you can take and move millions and millions of dollars within minutes. I had to do a wire for one of our properties that we were acquiring, and it was a 2-day move. To go from this, like, you got to do the wire, you got to get the approval, you got to do everything else, and it cost me on the other deal like delay fees, and I did everything right on my end. It was the bank's issues on their end. There was nothing that I could do about it. But at the end of the day, I can move very cleanly, very easily, money and currency anywhere on the planet without having to ask permission, without having to do anything. Now there's risks. Send it to the wrong wallet, you got problems. There's no one to call and say, let's reverse that. So I really, really, really do believe we're going to see a little bit of, like, let's retreat to the basics. let's say what's working, what's not, and the successful teams that are going to rise out of this. And there's going to be a lot of really successful teams that are going to rise out of this bear market, like there always are going to have actual real world use case, and a little bit less of the hopes and dream, backed by hopes and dreams.
Agree. And if I can make one other prediction,
please.
I predict that the pain point of these connections, the weak point of these APIs, these multiple connection points, when we see a team and a project or a technology that really works to solve that fundamental problem, I think that will have tremendous value to Web3 as a whole. And sometimes it's the folks that figure out how to, and I just say this because actually my family has an underground utility business. Sometimes it's the folks who are figuring out how to lay water and sewer line underneath the highway. That actually are solving a very real problem that maybe no one ever sees. And I think this is a very real problem that is a pain point for the entire Web3 industry. And I predict that over the coming, pick a time frame.
Oh, good.
I predict that we're going to see some movement on this in the next 12 months.
I completely agree. I mean, it is again, the phoenix will rise from the ashes. The asset class is strong, and I will say, despite all the kind of issues it had, it's a happy conference. People are excited. They're talking. They're looking at things. They're engaging, and I want to really make sure we end on that. Is Web3 has been the most inclusive, engaged, and accepting community I've ever seen. The only politics you ever hear is what regulatory nonsense is going to come through. The only kind of higher, like, who's who quite simply has to do with what have they done in the industry or what are they hoping to do. Other than that, there's no There's no angst. There's no, you're not allowed in here, and the crowd is just excited. They're excited to see the technology evolve, and I think that's really, for all the doom and gloom we talked about and really recapped on this, I really want to make sure that we end with like, people are super excited to see what happens. I mean, it is re-engaged people that have said like, I made some bad bets. I have to reevaluate my theses, but I'm not leaving the asset class. It's nothing.
Oh yeah, I haven't heard
changed.
anyone say that.
No. And in fact, the VCs, the big VCs, are going like, we're now looking for what's that next opportunity, what's that picks and shovels that really is going to help this thing stabilize and grow. So I'm excited.
I am too. Be greedy when others are fearful, right? To quote a great.
Yeah, you only make money on the red days. yWhales and everyone else, thank you guys so much. This is our first in-person, live from Permissionless. We thank all of you that were here. A massive crowd, amazing, bankless, permissionless. Thank you guys so much. And again, we'll see you next time. It's going to be back on Zoom now. Peace.